Welcome back to Be Open to Wealth. I'm going to make you a promise. You don't need a fancy degree. You don't need a secret password. You don't need to be born rich to build wealth. What you need is a plan. A simple, repeatable plan that works day in and day out. I call it the wealth flywheel. Think of a giant heavy wheel. Getting it to move at first takes some effort. You give it a push, it moves a little. You push again, it moves more. Momentum takes over. The wheel starts spinning faster and faster. Your money can work just like that. This isn't a get-rich-quick scheme. This is a get-rich-for-sure plan if you have the discipline. It's about small, consistent actions that build on each other over time. The concept is simple. Save money, invest money, reinvest earnings. This three-step plan will take the guesswork out of it and give you a clear path forward. Let's get that wheel turning. Before you can even think about making your money work for you, you need some money to put to work. It sounds obvious, but you'd be surprised how many people skip this step. They jump right into looking for the next hot stock without having a solid financial foundation. This is a recipe for disaster. The first non-negotiable step of the wealth flywheel is to save first. This means paying yourself before you pay anyone else. Before the bills, before the fun, before the coffee. You set aside a piece of your paycheck for your future. This is the fuel for your financial engine. This isn't about depriving yourself. It's about making a conscious choice. It's about deciding that your future self is a priority. Start with an amount that feels manageable, even if it's small. Can you save $50 a month? 100? Great. Automate it. Set up an automatic transfer the day you get paid. Out of sight, out of mind. Automating builds discipline and consistency into your financial life. This initial savings does two crucial things. First, it builds your emergency fund, your buffer against life's curveballs. Aim for 3 to 6 months of expenses in a safe, accessible account. With a safety net, you can invest with confidence. Okay, you've got your savings machine humming. You have cash ready to be deployed. Now for the exciting part, where do you put it? It's simpler than you think. For most people, the single best place to start is a low-cost S&P 500 index fund. It's a basket holding hundreds of America's largest, most profitable companies. You buy one fund and bam, you're diversified. Simple, cheap, it works. Picking winners is hard, even for pros. Most fail. With an index fund, you're not trying to beat the market. You are the market. Fees are ultra low, so more of your money compounds for your future. It's the most reliable, set it and forget it way to start. If you want to pick a few individual stocks, do the work. Look for durable competitive advantages and strong balance sheets. More cash than debt. Run by trustworthy managers. Find businesses that can thrive for decades. Index funds, individual stocks, or a mix of both. Buy quality you understand and use. If you can't explain it in a sentence, don't own it. Here's where the magic happens, how you turbocharge returns and spin the flywheel faster. Reinvest your earnings. Many companies and funds pay dividends, cash sent to your account. A dividend is your reward for being a shareholder. You could spend it on a nice dinner, but that's eating your seed corn. Instead, use dividends to buy more of the same stock or fund. That's a dividend reinvestment plan, DRIP. Almost every brokerage lets you set it and forget it. Each reinvested dividend buys more shares, and those new shares generate their own dividends. Bigger share count, bigger dividends, more shares. A virtuous cycle. It's a snowball rolling downhill, growing with every turn. Einstein supposedly called compound interest the eighth wonder of the world. He was right. Over decades, reinvested dividends can be staggering, a huge portion of total returns. Keep adding new money every month alongside your reinvested dividends. That 1-2 punch, new capital plus reinvested earnings, is relentless in up or down markets. Month after month, year after year, it keeps building your ownership stake. You have a plan. You're saving, investing, and reinvesting. That's fantastic. But the market won't rise in a straight line. There will be corrections. There will be bear markets. The media will scream. Your gut may say sell and run. This is the moment that defines you. Patience is your superpower. Wealth is built over years and decades. Down markets are sales. Your regular buys now get you more shares for the same money. If you don't need the cash soon, welcome the chance to accumulate more. Diversify. Never put all your eggs in one basket. Even great companies stumble. Own a broad index or a basket of quality names across sectors to protect yourself. Diversification is your seatbelt. It won't prevent a crash, but it helps you walk away. Be a hawk about costs. Fees and taxes are termites that silently eat returns. Even 1% can devour a huge chunk over time. That's why I love low-cost index funds. Be patient, be diversified, be cheap. That's how you win. So there you have it, the wealth flywheel. It's not complicated, it's not a secret. A simple, powerful, 3-step plan anyone can follow. First, build the habit of saving monthly. Automate it on payday. This is the fuel. Second, invest consistently. A low-cost S&P 500 index fund is often perfect. Third, turn on dividend reinvestment. Let compounding spin the wheel faster. Control what you can. Your savings rate, your investment choices, your behavior. Take emotion and guesswork out. Put it on autopilot. All investing involves risk. Values go up and down. Never invest money you might need within 5 years. Keep that in high-yield savings. The most important thing you can do is start, right now. Make your first purchase, even if it's just $50. That's the first push. Now keep pushing, keep saving, keep investing. Let time and compounding do the heavy lifting. Now go do your homework. Thanks for watching.